What's going on, guys? It's Chris here with Retail Algo Trader. The date is September 10th, and this is going to be a real-time overview for the week of September 10th to the 14th. We will be using a simulated account to simply annotate the trades we are actively taking, as well as the process of building the trades and to demonstrate the risk-reward associated with these trades. All trades will be conducted with a single contract per strike to show the value of profit and loss per contract. Alright, first trade we're going to be looking at is Apple, AAPL. You're all familiar with Apple. Current implied volatility percentile is 85%, meaning that over the last year, implied volatility has been 85% lower than it is right now. Float is 4.8 billion, so not expecting too crazy volatile moves. There's no earnings coming up and no catalyst that I know of. 1 year max move of $11, and we're going to use a vertical spread here on the call side. Due to this downtrend, we're going to try to sell some premium on the top side. Alright, so we'll bring our options chain over so you can see the trade we're going to be looking at is trying to stay around the 70% probability using our rangefinder tool right around 229, 230, and also trying to keep around 80% probability of out the money on our options chain. So we're going to look at the 227.5 and 230. So we'll look to sell the 227.5 and buy the 230, and that will complete the build of our vertical call spread. And if we look to just get filled, it looks about a $18 credit right there. So if we bump this down to 18 for our limit order just to get filled, we should get filled pretty much instantly. And there you have it, order filled. We'll check our manage tab just to make sure. And there it is, we are order filled, and we took in a positive credit of $18. Now when we do the math here on as far as what we risked to get into the trade, the strike spreads were 250. So we minus the 18 that we took in from the 250, leaves us with 232 max risk. So that's the max we can lose. And then we look at how much we can make as far as percent wise, and that's going to be about 7% on this trade. So not a huge percent, but probability is super in our favor, and we can always restructure the trade later if we need to, or get out with a stop loss, or just get out, period. Alright, next trade we're going to be looking at is Alria Group, ticker symbol MO, with an IVP of 76%, float 1.8 billion, and a 1 year max move of $3.72. We're going to be using a vertical spread on the put side, and the puts we're going to be looking at is trying to keep around the 70% here using our rangefinder tool. We had a bullish move shown with the up indication using our pop flop indicator. We did not have a highlighted area, but we did have a up indication, and that being that the IVP is high, along with the up indication here, we're going to be looking to sell some puts. The puts we're going to be looking at, let me bring the chain over, is the 59.5s. So we'll look to sell the 59.5 and we'll look to buy the 59. And that will keep our probability right around the 70% mark. And also these have about a 75 to 80% probability of out the money. So to get into this trade, we have a difference of about $8. So if we put our limit order down to 8, we should get filled pretty much instantly. Oh, that says 80. Hold on. There we go. And enter. So we got order filled pretty much immediately. We'll check over here to make sure. And yep, we got order filled with an $8 credit. Now the strike spreads are $50. So in order to see what we're looking at here, we need to take the $50 minus the $8 credit we took in. So we have a max risk of $42. And with the $8 we took in, we have a max profit of 20%, right around 19 and some change, so right around 20%. And that will be the parameters for this play. Alright, next trade we're going to be looking at is QQQ. You're all familiar with QQQ. Current IVP is 72% with a float of 389 billion and a 1 year plus or minus max move of $6.76. Just based off of the price action here, of it kind of holding, supporting right here, not really busting up or busting down. We're going to look to do an iron condor. We have not been given any highlighted or directional indications down here with our pop flop indicator. And we're going to try to stay about 70% probability with our rangefinder tool. So in order to structure this, we'll move over the options chain here. And the top side, we're looking at about 185. So we'll come up to our 185s. And we got 185 and 185.5. And that'll give us roughly about a 70% probability. We could probably do a little lower and still stay within that probability, because we're also looking at probability of out the money for the contracts themselves. So if we look at the 184.5s and 185s, that'll give us roughly 70% probability and still keeping our probability of out the money for those strikes above 80%. So if we look at to sell the 184.5, buy the 185, come down to our put side, and we're looking at 70% probability of around 176.92, so about 177. We could probably go a tad bit higher and still stay within that. Let's see here. Yep, 80% probability of out the money, as well as sticking around our 70% probability mark using our rangefinder tool. So if we sell the 177.5 and buy the 177, that is a difference between the bid and ask of about $5, and then down here at the bottom side of about $6. So if we try to get filled at about 10, I don't think we'll have an issue getting filled with 10. And there you have it, order filled. Check our manage tab. And there we go, we have it. It looks like we took in a credit of about $63, then minus the debit that we paid of 35 and 17 gave us about $11. So if we couple all these together, you can just drag and drop them and it'll form an iron condor. And there you have your iron condor $11 credit. And with the max risk being the strike price differences, the strike spread differences, we have about 50-cent strike spread differences with the $50 that we took in, or the $11 that we took in. It's a $39 max loss. All right, so we have a $39 max loss with a max percent return of about 34%. So if everything goes well, we'll make about 34% on the money that we risked. All right, and that's for QQQ. Our last symbol we're going to be looking at is Micron Tech. That's ticker symbol MU. We recently had a bearish directional indication with our pop flop indicator a couple bars ago. We have no price buildup indication, looking for that highlighted area that we see over here. We have about some support, building up down here, and nothing really holding us back from the top side. Price is kind of holding flat last few days after this nice little drop. So we're going to look to do an iron condor on this play. Now with that in mind, let's try to keep our probabilities of around 70 to 80%. So in order to do that, we'll bring our options chain over. And we'll look to keep around the 70 percentile mark down here at the bottom for the puts. So that puts us right around 42. So if we do we could probably do a 42.5 and a 42. That would keep us above the 80% probability of out the money, as well as right around our 70% mark for our rangefinder tool. So we can go ahead and sell the 42.5, buy the 42, come to our call side, and we're looking for about 48 to keep us within that 70% probability using the rangefinder tool. So we come down to 48, and we look to sell the 48, buy the 48.5. That's about a $3 credit. If we move up one, we can get about another $4 to $5 credit. So if we sell the 47.5 and buy the 48, that still keeps us 80% probability or higher of out the money, as well as right around our 70% mark using our rangefinder tool. So that's the bid and ask difference of 5 for our call side and a bid and ask difference of about 4 for our put side. So if we try to fill right around about 8, we should be able to get that no problem. And we immediately got an order filled. We'll check our manage tab just to make sure. And here's all our singles that we filled. We'll move them all into one, forms an iron condor with a credit of $9. And with our strike spreads all being 50 cents, that means our max initial risk was 50. So we take the 50 minus the 9 that we took in, leaves us with a max risk of 41. All right, and with the $9 that we took in against the 41 max risk, it looks like we're looking at about a 22% return on our money. And so that is ticker symbol MU. We're keeping around a 70 to 80% probability with about a 22% on our money if everything goes as planned. And that's the 4 trades for this week. My name is Chris. Make sure you check out retailagrotrader.com for ticker or indicators, strategies, and just general market education if you're interested in looking at any of the indicators that we have in this video. I will see you next week when we exit these trades and enter more trades on next week's real-time overview. Have a good day.